Recording in progress. Hello, dear students. Let us understand about economic analysis in this session. So, whenever we need to study about a subject called as security analysis and portfolio management, so understanding about economic analysis is also equally important because whenever we need to do some investments, okay, certain analysis part that we have to do, right? So, like in that, first one is economic analysis, and continued with that, we have company analysis and industry analysis also. So, contents in economic analysis that we are going to discuss for now is what is this base? That is introduction. Second is economic factors which impacts investment decisions. And third, integrating economic analysis in portfolio management. So all these things we'll discuss one by one. First one is introduction part. So role of economic analysis in finance. See, being acting as a stakeholders, understanding about the trends in market is very very important. Sometimes market sometimes boom and sometimes down. So that fluctuations. So understanding about those fluctuations, being acting as an investors, so that is a crucial part. Okay, so where that decision is it is going to decide your entire financial performance. It is you're going to improve or to it is going to decline. And next is key economic indicators like first one is like GDP. Whenever we need discuss about economics, obviously GDP is an important factor or indicator. And next is employment rates, unemployment, all unemployment rates. Obviously, we'll discuss that too. And even inflation. So all these things, it literally decides the economic condition of a nation, right? So this also, it plays as a very key indicators, very important key indicators to do any kind of, planning or some, financial decisions that we need to take. It helps a lot. So next is types of economic analysis. In this first one is microeconomic analysis. Second is macroeconomic analysis. So micro, yes, it focuses on individual markets. That is very small group. Okay, their buying, purchasing power, all these things, buying behavior. So understanding about the supply and demand with a small portion. Within this small portion, this microeconomic. Whereas for macroeconomic, we can say as a whole. Okay, so where it discusses about a brief part like broader area. So total employment rate, inflation, national income, all these things we can say like it is a broader area, right? So it is not going to affect only a small portion. It is going to affect entire portion of a nation. Next is economic factors impacting investment decisions. What economic factors? First one is effect on borrowing cost. So how much loan that we received from our borrowers and how we are going to repay all these things. Sometimes if it is too expensive, repaying that for any individual, that becomes toughest part. And next is influence on investment returns. Okay. So what are all the returns that we are going to, get back after certain period. So maybe probably it is based on your savings or else your investments, right? Next is impact on purchasing power. So what it is going to, bring some changes. So sometimes, inflation, it erodes the purchasing power of money. So consumers or customers, they are not ready to buy hereafter because of the inflation rate. Okay, so they are spending all the savings behaviors. It literally changes. Okay, and next is what adjusting investment strategies for inflation. What kind of adjustments or strategies? Yes, portfolios, different diversifications are there. Being acting as an investors. Okay, so that too particularly during inflationary periods. Okay, so purchasing of commodities, real estates, or selling, all the buying and selling, everything it changes. Okay, it differs. And next is integrating economic analysis in portfolio management. First one is studying or predicting the future, that is economic forecast. Okay, so like we need to gain some invest insights, like what is going to happen in future, what is the different things or changes going to happen in the market. Okay, and next is diversification based on economic trends. Okay, so again, studying about market volatility and all kind of risk available in the market. So we know that there are two major risks. One is systematic, another one is unsystematic risk. So next part is risk management. So again, identifying what are all the economic risks available in the market. Probably it may be market cycles. That is the fluctuations, ups and downs. Okay. And next is there are many indicators. Okay. Even we can say geopolitical factors also. So studying about all these risks. And on the other hand, mitigation strategies also we need to know. Probably, uh, to predict the future. That is, we have to understand something about the hedging techniques, that is preventing your cash or preventing yourself from risk. Okay, so also asset allocation, that is also very important part. So these are all the mitigation strategies. So this is all about economic analysis. Thank you.